Hello, hello, and welcome to April 16th. The Alphas have another win on the scoreboard with Adobe exiting at 170. There we are. We got it out at 1540. We got in at 570. So let's bring up the calculator and show it. There it is. Well, that's the percentage, which is going to show you a little later. Let's clean that up. So that's another big hit today. All right. So 1540 was our exit. 570 was our entry. 970, divide that by 5.7 as a percentage, and we have a 170% return on the exit for Adobe. Also note that the ode was 1637, and then we had an exit of 970, one contract, 970 minus $2 in fees, 968 minus 1637 on the ode. A new ode now is 669. That is 669. Now, explain the exit. We had 100% fit plus ROI today. The result is that we went to close high, exit. What that means, last bar close. So the last bar close was here at this high, which represented the 188% yesterday. You can check yesterday's videos for April 15, April 15. Now, what that means is that if price dropped below the 522 that I put here, actually should have been 523. Let me go ahead and adjust that while you'll also the learning lesson of how to navigate Thinkorswim. So at 523, that was our exit. We're coming off this 523. Right there is 523. The result was that it opened high, came down, spiked through, and then came back out. Okay, we took off 970 off the table on one contract. If that had been a 2 or 3 or 4 contract play, it would have been that multiplier. All right, that said, we now have a new O of 669. And that was the exit. The exit is the high. That's what we would call the exit high. Now, if we had reached 200, we would exit on the open, which would have been that or anywhere else. It could gap down overnight. All right, we took the money off the table. Trade is over. The profit's home. And now we have a buying power of 2,065, which means we are going to be going back out on the hunt to fulfill that. We also note that we have now 6,615 in the coffers. That means that our max option costs should be no greater than 6.61 right there. 6.61 would be our maximum option cost if we find anything. We don't know until we run that scanner. So that said, let's go on now to our new leader for the alpha. That's KR. So coming over to KR, and KR is right here. And so now we're looking at KR. So KR is now the new leader. Our stop is here on the higher low, lower low, higher low, because KR did close its third ratios right there recorded on the, and now it's a matter of waiting this out to see where direction it's going to go. It's holding at 46% on that close right there. So we zoom in a little closer and bring our data back into the play. You'll see right there is the upper low, lower low, higher low. And now we're waiting to see if we can get more push up. If we get taken out, this is the low with the closes here. If we get taken out at the 3672, yep, that's the low. And if we get taken out at 3672, we could get up with maybe about 225, 200, 225, but it would be that much more off the ode and that going in the right direction. That takes us now to Capri in third place. And Capri is doing quite nicely, 23%. Has not hit a third ratio. As you can see right there, our third ratio is 57.95. And we closed today at 53.83. So we're still $4 out. And down here on the ATR is 2 233. So we're still 2 days out on the ATR. But again, you can see sometimes the ATRs do not, it's an average. And therefore, sometimes you get these short bodies and there's nothing to do about it, but just wait it out. That takes us to T. AT&T has now moved to 12%. And AT&T 12%. So it has not reached its third ratio, but it came down, tested the 2930, and then come right back out. That's a nice shine direction. We do have to keep an eye out on our expiration date. This is a June at $25 strike price, and today we are at April 15th, so we are 60 days out from expiration on this. And we have to look seriously versus what happened to RCL. I'll bring that up into play in a minute. Our last positive was CVS at 11%, and there it is. And there's our third ratio way up there, and that third ratio is reporting in at around 80. That's $80. $80 right there on that third ratio. And we have closed today here at 75, almost 76. So it's $4.22 out, and almost $1.25. So that's about 4 days. We're about 4 days out. All right. So let's go ahead and speak about what are we going to do with RCL. It is also expiring in June, and we are under the gun. So what has to be happen here is that we're going to have to start going down to, first we're going to start off, we are expiration June. Remember I mentioned we're 60 days out. The options now is going to start having time decay. It's going to accelerate. That means it's going to go faster. And the value is going to drop off. So we're going to start going with this high here. The high here is 83.73. So we're going to give it 88.73. So we're going to give it a price of, let's see, again, the high is a 88.73. So we're going to give it 88.75. We're going to start drawing the line in the sand. Line in the sand. So alphas, strategy STO, it's a call. No, it's a put. It's a put that's not going our way. Exit. And that's it right there. So we're going into our order ticket, and we'll change that. And that's what will be happening here at 88.75. We're going to be writing this down to get the best we can to get something out of this. And 466. So if we get out, if we get losing around, let's say 450 more or less, that will add here to 1575 or thereabouts, whatever it becomes a new O. And we'll just wait for the opportunity to come back and hit us again. So let's wrap up real quick here. We have 6,015, 66.15 minus the 55.33 from the start. That gives us a 10.82 ahead. Divide that by the 55.33 of January 1st as a percentage, and the return is 19.55. Round off 19.6. Where is the S&P? And the S&P is at 11.49, so 11 and a half against our 19.6. And with that said, we're going to conclude today's report for Losers Become Winners. Alphas exit with Adobe at 170% in 31 days. Alphas now have 20 profitable trade exits since January 1st. And with that, thank you very much for stopping by and checking it out.